Hey, welcome to the Closing Beat, everybody. Happy Wednesday out there. I got the red on today, just figured, red day, figured wear some red, a little throwback there. Welcome to the show. Have you seen the markets today? We're going to cover them all here for you. We'll go over all the good, the bad, and mostly ugly today. But we're financial advisors here at Jazz. We like to have a little bit of fun, so I hope you'll check us out at jazzwealth.com. And if you want, you can play our game. It's called Guess the Dow. I was really curious. I didn't have a chance to check, but I wanted to see where everybody's guesses were after a day like today, because you got to imagine most of you probably guessed a little bit higher than where the markets are at. But we'll see. We'll announce the winner, of course, in 2 days. Whoever's closest without going over, we send a $100 gift card to you. Or if you're one of our customers, we'll credit you $100 there. Also, we have kind of a fun video that we posted over the weekend about decorating and just general hijinks and hanging out and everything. And one last bit of homework for you today. No show on Friday, unless something crazy happens, but going to be kind of busy. So no show planned. If it's a wild day, then I'll figure something out. Maybe we'll just come and do like a raw show or something, but just want to give you that update. Okay, let's get down to it. Let's talk about the stock market. Wow, you can see it. Those numbers are right on the right-hand side of your screen there. Dow lost 3.5%, S&P lost 3.5%, NASDAQ over 3.5%. Russell 2000 did the best again. It's holding up the best and continues to hold up the best. You got lockdowns in Germany, now in France actually, they just came out with that. Their cases spiked pretty sharply. I talked about that in the Notes from Jazz email this weekend. Boy, they've got some problems over there, and they say the U.S. is just a couple weeks behind, so there's a little bit of sort of panic there. You also have the election, and the worry is that in the thick of the election season here, that there's not going to be a lot that gets done, so people are a little bit more worried than normal. Probably. Well, investors are, clearly, you can see on the charts. Let's look at the S&P here. Got a sharp down day, over 3%, like we said a minute ago. Headed back to this area here. Remember, this pullback from here to here was right at 10%. And so we're basically headed back into that where we were 10% zone. Now, you would still say that the pullback is from this high to this low. You wouldn't use this high. So it's still technically working on a 10% pullback because you always use the prior high when it made a new high. So just a little bit further here, about 32, 30-ish. Right, basically, let's call it this prior low. That's going to put you back at that 10% level where a lot of people like to look for bounces, short-term support, and things like that. Nonetheless, the S&P was kind of weak today, and I want to point out one thing. Look at a 5-minute chart. There was no attempt at bouncing today. Here's where the stock market actually opened up right there. There you go. And so we sold off, little bounce, and then smack back down. Attempt through lunch to get a bounce, nothing. A little bounce after lunch, smack back down. Nobody was interested in buying this market in a consistent way today. There was just no love out there for the bulls. So if we look at the S&P, we're now 9% off the highs there. Today, if you take a look inside of there, over 1/3 of the stocks in the S&P lost 3% or more. Right, so that's a pretty sharp day down there. You got some strong names that stand out. Now, here's why I point this out, not to kind of make it sound exciting, but if you're looking for a bounce in the market, then you want to look for the stocks that are already showing strength. So I want to point those out. If you believe the markets are going lower, then disregard the following stocks. Pulte Home Group, actually home builders did quite well today after their pullback. A lot of them have pulled back, and that's considered a buyable pullback. So Pulte Home's up 1.5%. I think that's kind of interesting when you see something like that. Travelers, that's going to be earnings related, and they got a nice little bounce up 2% today after having already seen a pullback. So if you're thinking stocks, you're looking for strong stocks, maybe look there. The last place you might want to look is energy, but if you happen to look over in energy, ONEOK had a decent day relative to the rest of the space. It's the strongest energy name over the last month. That's a tough one to point out. I just happened to look at it, so I thought I'd point it out there for you. Let's take a look at the Dow. There we go. So you got the Dow now over 9% off highs. In fact, it's almost back to being 10% down from those prior highs there. United Healthcare, oh, no, you got to be able to see it. There you go. United Healthcare, one of the big drags today, down 4%. The other big drag on the day in terms of contribution to the weakness was Salesforce, down 5% on the day. Mostly broad weakness, though. Travelers was the only standout there. The Dow's down over 5% now year to date after floating around being positive, negative for a while. The weakness is obviously set in there. If we take a look at the NASDAQ, there you go, just about 10% off the highs there. Broke through the 50-day. Yesterday it held the 50-day. The day before that did okay. Today is an official close below the 50-day moving average after holding nicely there. So kind of in a no man's land here. You've got you could have the belief that we float a little bit lower with some of the tech stocks being weak there. You could also have the belief that we chop around. It's a tough spot technically to make a new decision, if you ask me, for the NASDAQ. So that's a tough one there. All right, FinTips videos, they're always in the bottom right-hand corner of your screen where you can see what we talked about. We did GDP in the market. GDP numbers come out tomorrow. Will the GDP numbers cause a large move in the market? Well, our Monday video covered that. Today we actually released the Biden tax proposals versus what Trump has or what he's suggested that he wants to do should he win a second term. Not a political video, but I just wanted to go through the different numbers there. I knew people would think that was political. I saw the comments there, but nonetheless, I just want to point it out because we have to plan for that with our customers and stuff, and just be ready, for whatever happens. And we'll find out on Tuesday, so not a big deal. And then on Friday, we'll have a fun kind of video just talking about a strategy we used for a customer that was way outside the box, but following the rules of something where customer had something they wanted to tackle and couldn't figure out how to do it. So we talked them through the rules and how to reduce their taxable income, but still get money into an IRA like they like to, and still technically get the deduction, although not. And you'll see. So that's that one there. Our research site, yesterday I posted the results of the study. If you bought the worst performing sector now, would it then be subject to some tax loss harvesting in December? Would you be better off waiting? So you can take a look at the data there. And then tomorrow, every Thursday we do a class for customers. Tomorrow we're going to do a review of how to go find all the stuff. For some reason, we get more customers when the markets fall, not so many when the markets go up. So we have a lot of new people that have joined us. Thank you so much, by the way, for keeping us in mind. A lot of new transfers, a lot of new accounts. So I'm going to go through how do you go find in the dojo? What are you looking for? Where do you find your updates? Inside your folio account, where do you find statements and performance and all that great stuff? So I'll cover all of that as sort of an overview. If you're brand new to us here at Jazz Wealth, come hang out with me. Thursday night, it'll be a little kind of a hangout there. Okay, I got good stuff here for you today, so I'm going to quit rambling. We're going to move on. We're going to the sector breakdown here today. We're going to start with tech sector. Oh, no, there we go. Start with the tech sector. That one's been kind of rough. In fact, if you look at the tech sector, I believe it was the worst performing sector of the day. In fact, it was. Actually, I should show you this. Let's do it. So if you were to take a look here, you got the tech sector down 4.3% on the day. Now I'm going to go over here, take a look at the charts there so you can see. They're all color-coded. I just put them down there. So at the bottom there, you got tech and energy. Those guys lost over 4% on the day. They were the ones hardest hit there. Tech in general, you saw the thing probably on the TV with the Congress and, grilling the Twitter people and Jack Dorsey and everybody. So the tech stocks had a pretty rough day overall. Microsoft was in the news. They sold off about 5% on the day. They did beat on revenues by 4%. Cloud division for them is just killing it there. It's growing by 20% year over year. By the way, Microsoft's cloud division now accounts for 35% of their revenue in the last 3 quarters. So really, really looking pretty cool there. The one negative that stood out, and maybe the focus, aside from just everything being weak today, the cloud services part of their business is getting more expensive. So if you break it down, was 3% of revenue in 2011. It's almost 12%. So that's fine if you have that kind of growth quarter over quarter, but that's a bit of a concern. So I think the stock probably would have been flat to downish on the day anyways based on that, because I know that was a focus point for a lot of them there. So anyways, that's all I got for you there. We're looking on over here, communication services. They were weak today. Facebook's going to be your biggest drag overall. None of these sectors even really tried to bounce throughout the day. Energy was the only one. You could see it in sort of that muted green color in the background, but it didn't work. Everything sold off. This is an intraday chart of every single sector there. Just not good there. Google as well was one of the weak spots. Now, if we look at industrials, here's something interesting, a little fun fact for you. Industrial's down 3.25% today, mostly because of UPS, which lost 8.8%, and Caterpillar. So I was like, wait a minute, UPS lost 8% on the day? That seems a little bit odd, don't you think? In fact, that is odd. So I took a look here to see. That is officially the 3rd worst day that UPS has ever had as a company, believe it or not. We looked at every single day, looked for anything that had an 8% return, loss of 8% or more, and here it is. These are all of the losses of over 8%. There are only 2 other days that were worse than UPS. By the way, every single loss of 8% or more, the following day was also down. So there was not one point in the history where it has sold off 8% and the next day somehow it miraculously rallied. That did not happen. So what do you think tomorrow? Should you buy the stock? The data says, and it's not a lot of data points there, I guess, but it says you probably should wait. That's a way outside the average move for UPS, that's a tough one there. All right, moving on here, we'll look at some of the other sectors. You got home builders, not a sector, but it's just an area we've been looking at. Like the pullback here, a lot of stocks inside this space that are looking good. It held up the best there. And if you look at some of the stocks, you got names like MI Homes. We happen to own it, so I'm excited that that one held up nicely today. But that one looking good. Pulte Homes is always a crowd favorite. Nice recovery there. We already talked about that one. Taylor Morrison Homes as well. You got people coming into this saying, all right, this is a buyable industry at the moment, and today was really proof of that. All right, lesson time. Let's take a look at TAN. This is the solar ETF. We talked about this guy pulling back, getting too extended there. You want to be careful. And you remember, if we go over, what day was it? What was it that we covered this? The 9th, I think, if you want to look at the closing beat. I shared this chart with you. We talked about the stocks, how extended they were, where they were at, volatility, performance year to date, and the recent change on just that one big down day to show you that the bigger gainers had the bigger declines there. So you might want to check that out. Now, interesting things to take a look at. Two names reported earnings. Both of them did good. I mean, they really did good. I'll start with First Solar. First Solar just killed it. That's one of your new highs here today. Revenue up 70% year to date, or year over year. Analysts had only expected revenue to be up 30%, so much better than expected there. Earnings were more than 2 times expected by Wall Street there, and gross margin up 2.5%. Enphase is the other one. Well, you can see, obviously, First Solar had a good day. Go over here. Enphase was the other one, up about 4% on the day. Not as good, but still good earnings report there. Revenue up 5.5%, higher than expected. Earnings beat by 17%. They guided higher than expected as well. And now, if you go back to this chart, you've got Enphase trading now at 100 times earnings, just over 100 times earnings. So going to be a little bit more expensive there. First Solar is going to be the same thing. However, it's technically a little bit cheaper if you look at like a trailing 12 months. It's up to you how you want to look at it. But both of those doing really well. Why is that? Why did they have a good day today? Is that just a bounce after a sort of extended pullback there? Well, check it out. Here is the U.S. solar energy consumption. You see does that? We have a sharp spike actually in the amount of solar energy consumption. And if I back this out for a second, we can compare, where's it coming from? Is it coming from more residential people? Are we putting more of this stuff on our roofs? Is it Tesla and their solar thing? What's going on? Is it commercial spaces? Actually, so we break it down here. The industrial space is up more than the retail space, but both of them are doing well. So that's one side of it. You have consumption of solar power at its highest level ever. And so that's one reason that people are looking at that. I'm going to leave this sucker and we're going to go over here and take a look at the latest data from the EIA, Energy Institute. And we're breaking down energy production by modality or whatever you want, however you want to look at it. We included everything here. Coal down about 20%, still about 10% overall of energy that we use, but still down 20%. Crude oil down 14%, even though they keep debating this thing on TV. We just move on. So already lower production there. And if you look all the way down here, you've got solar energy, which up 48%, right? So if we look, that explains that previous graph there. So solar energy, highly, highly in demand. It is being obviously used as soon as it's produced and everything, but production off the charts almost there. So that's a big sort of boost there for solar. Now, before you look at that and you say, wow, basically up 50%. Solar is only accounts for 1.4% of our energy output. So obviously there's room to grow there. There's room for people to get excited if that continues. And it seems to be continuing. That's the data that everybody's trading on. So every solar stock basically had a good day today. Just wanted to share that with you. I know it's a little bit more than we normally do, but there you go. You're welcome. New highs and new lows. Here we go. There were stocks in the new highs and lows list today. We had one new high. That's going to be Rollins. So if you take a look at Rollins, I believe that's earnings related. Hit new 52-week highs and closed up there. So pretty good overall. You got Biogen, which was already weak, selling off. Lost another 4%, breaking through all support. There's just nothing for anybody to get excited about there. Also, Gilead Sciences broke to new lows. That's kind of accelerating. I would maintain that even though there's no support in this general area, there's there's going to be new support. I kind of just feel like maybe that one's going to be okay somewhere in there. You got even REITs lower today. Equity Residential hit new 52-week lows and broke down all kinds of support there. Wells Fargo, unfortunately, did the same thing. That one, it's just been really, really weak. I mean, no signs of life at all in Wells Fargo. And that's pretty much it. Those are some of the interesting ones. I point them out because there's no support there. So technically, there's no reason to assume that they're going to bounce anytime soon. You need a broad market rally or a sector-based rally in general. So some nastiness there if you want to look. All right, let's take a look at our watch list here. Again, if you believe that the stock market is selling off and is going to find some area of support and start bouncing maybe after the election or whenever you think it's going to happen, then what you're doing now is you're looking for stocks that are giving you a reason to buy them. And it could be that they're showing strength, like I highlighted a minute ago, and it could be that they're pulling back, falling to some area of support. So let's start with something like this. Intel's going to be first. So you got Intel. It had the big gap down on earnings, just like it did the prior quarter there. Same thing. You don't mess with it on the first day. It's another great example, by the way. I talk to you guys. I see what you're saying. You know you don't buy a stock on a first big down day. And so here's another great example. Vertex was the other one from the other day. Anyways, what we have is a stock that's rapidly accelerating down to a known and obvious support area. If you believe in support areas or not, that's okay. What I'm looking at is that's an obvious one. For all the people that do believe in price support, there's no chance they're going to miss that area right there. And that's what I'm looking at. It's not necessarily that I'm interested in a strategy. I'm interested in how many people are going to follow a strategy. And there's nothing more obvious than the March 16th low down there. So you got Intel as the first one there. All right. We'll go over to telecom here. We're going to look at Lumen. So Lumen's the same thing. It's a weak stock. It's not one you're going to look for to make you millions of dollars. But as it falls over the last couple of weeks, notice that it's accelerating. You got an accelerated decline down to an obvious support area right there. It's down over 30% year to date. Interestingly, it yields 11%. For your efforts. So I'm just pointing it out. But you got the same low on the same day, same obvious area to look at there. Moving on to Eli Lilly. There we go. So Eli Lilly, this one with the gap down after being already lower. It's got a little bit of room to go, and you might not assume it gets down to 120, but this stock has been moving in a much larger range than it normally does. Eli Lilly, if you look over here, typically calm, collected, just stable looking stock. Then comes the virus, and there's all this news back and forth that causes more volatility. So the normal range of Eli Lilly has been expanded by a multiple of 3.5 at this point. So for it to go down to 120, it's not too bad, right? It's down just a touch. It's going to be, call it 1% down year to date, but it's down over 10% in the last month, yields 2.25%, and it's also now over 10% away from its 20-period moving average. That's the green line on the chart. Stocks, and this one in particular, do not like to be away to that degree from the 20-period moving average. The last time it was more than 10% away was down here. What happened? Took a little time, but it bounced. You had to wait 3 or 4 days. This wasn't quite 10%, but it still bounced, and that was not fair. That's earnings related there. But stocks don't like that. We are now well past being extended here for Eli Lilly. All right, moving on. You got Cisco doing the same thing here, right? You got a downtrend that's rapidly accelerating. This is kind of a boring stock just in general, but it's getting active. I don't know. If you look down to this prior low, obvious area of support, and just thought that would be an interesting one to point out there. Altria. This one threw me off, I'll be honest. I'll share a little something with you. So this stock is selling off here. It's down 25% year to date. And I thought, that's a lot. Is that just weird? Like double digits, 25% is supposed to be a slow, dividend paying, agree or disagree with tobacco sort of thing. And it's supposed to be stable, right? Actually, 80% of all years had double digit gains or losses. 80% in its entire history. So more times than not, a lot more times than not, it's going to gain or lose double digits in a year. So it's a big mover there. This isn't your slow, average 7% return or whatever. She's a moving there. Anyways, yielding 9.25% right now, selling off to an obvious support area. And if it happens to that the markets continue to be weak, you've got a more obvious one down here. So you've basically got a range to build a position and know you're getting about, at that point, close to a 10% yield if you're looking at that. All right, these are not recommendations, by the way. I'm just pointing out technical patterns. I think I probably should say that. So Vertex, this is the one we talked about, right? You don't buy after just one big down day. That was the earnings related drop there, lost over 20%. It has since settled down a little bit. It's got some obvious support here around the 200 number. Does it come down there? If it does, it's obvious. It's staring all of the pros in the face. Anybody that's a novice trader that's just learning about that, they're all going to look at the same area. That's important there. And it's over 15% away from its 20-period moving average. Do not like to be extended there. So we'll see. And Valero, scratch this one, right? This is in the energy space. This is a tough one. It's starting to accelerate, and you like that as an idea of trying to find a bottom. I don't know that it does it. It's a secondary sort of list there. Obviously, the $30 area is your support. Maybe something interesting there, but it's at the bottom for a reason. And so that's it. That's kind of a watch list of preparing for what you may want to look at should the market start to pull away, give you a little bit of a sell-off, and you're looking for stocks to buy. Do that now versus waiting for the markets to start bouncing, and you'll be ahead of the game there. So you've got two things today. I helped you with looking at strength and what we just looked at, looking at weakness. So hope you enjoyed. All right, let's look at some of the stocks in the news, wrap this thing up, and get on out of here. UPS, we talked about it, down 8% already. They beat on earnings. They didn't give any guidance. Stock didn't like that. Markets weren't good today. The stock fell off a cliff. I mean, and that's, now that's a big move. General Electric beat on earnings and managed to hang on to a good day today, 4.5% there. Beat by 9 cents. Revenues came in better than expected. Looking sweet there. Boeing continued to sell off, 4.5% there. Narrower loss than expected, right? So I think if we look, they were expected to lose $1.94. They lost $1.39, still lost money on a weekday. I don't know. I wouldn't have thought maybe 4.5%. That's maybe a little bit big there. For those of you looking for a discount, of course, you're happy to see that. Overseas, you got Sony. So we look at Sony. They've had better than expected earnings, raised guidance, very positive about everything going on there, up 5.5% on the day. And then you got Apple. Supposedly, Apple's looking into making their own search to be like a little Google. That was kind of the interesting news there. A couple iPhone pre-order news events, but not really anything else. Just a weak stock on a really weak day. That's it. So that's what I got there. I guess with Disney, broke the 200-day moving average, down 4% on the day. Elizabeth Warren had sort of criticized Disney for not taking care of their workers that they had to fire, and Disney fired back and said, let us open the damn park, right? In California, they're not letting us open the park. We can't support people if they can't work, and so therefore, no, they're firing back. They were pretty tough for old Disney out there. And I said Disney. Before I get to the comments, I need to give you a Disney stat. Disney, so I'm on the spot. I just thought about it. Okay, here's a good one. In Florida, actually, and a lot of these are from Florida. And you tell me if you knew this one. Over by Magic Kingdom, just to the south a little bit, there's a bunch of woods. There's actually an airport there. Disney's got their own airport. Yeah. Now it's not what? Well, it's not operational at the moment. Right now they're just parking buses there because I'm assuming. They used to park their trailers when they would build new parks and stuff. But in 2006 or 7 or something like that, President George Bush flew in there to go to Disney World. They actually landed on that thing, and he went to Disney World, had a good time. They flew him out. Other than that, it's restricted airspace. You can't go in there. Disney had an airport. They were going to build it as part of Epcot. There's renderings and everything of it, where it was going to be part of the community. Take a flight from Tampa over to Disney, go to Disney and fly back sort of thing. Never made it, but it's still there. Yeah. So if you're flying a plane and want to get in a whole lot of trouble, go fly yourself and land on old Disney's airport. Yeah. Tell you what. The more you know, right? Okay, let's see if you have any questions. Maybe the stream will be caught up. Earnings tomorrow. You got Apple. That's going to be the big focus. GDP numbers, of course, coming out. Mohawk, Starbucks, Comcast, Google, Amazon. It's going to be a lot to look at tomorrow. Get your rest, all right? Texas Instruments paying $1.02, Costco 70 cents, Morgan Stanley 35 cents, and any election excitement stuff could just be anything coming out there. We will see what happens. You like your Disney under 100? That'd be a pretty nice discount there. Yeah, I like it. Is there an index for the rails? That's an industry, so it would be using the XLI if you wanted to look at the industrial sector, but otherwise, no, you're just looking at the rails individually because there's only a handful of them. Yeah. There you go. At what point does the SPY have to fall under for Biden to win? Well, if the market is lower to some degree on Tuesday, and on Tuesday, if we find out on that day that Biden did win, you'll know your answer. I don't know. Hey, Dustin, can I set up recurring deposits to my account on the website? Absolutely. Yep, you can set up recurring deposits in any format that you want. Log into your account on the Quick Links menu, select Transfer Money, and then it'll take you right to the withdrawal page, and you can choose, daily, weekly, monthly, really anything that you want to do. Yep. You got it. Red Days. You guys are, that's my team, right? Are you guys out there, right? I like that. All of you guys seem to like discounts, and buying on dips and stuff. That's me. That's what I like there. What do you think of the VIX jumping today? If it didn't jump, you'd be concerned, right? So remember how the VIX is calculated. It very much should have jumped, and did, of course, using the VXX. If you want to use an ETF. VIX after hours is actually down just a touch, but huge day for the VIX because the market. Yep. Does the market look like a double top? Not technically a double top. It's a little different type of pattern because we made a lower high. So you're going to have a whole bunch of the head and shoulders people out there. Yep. I don't know what that means. Black sale for the website. Block sale? Not sure. Not there. Where's the red drink? That's all we're missing today. It's over in the speakeasy. I had to move the stuff today. Yeah. Interesting. Yeah. Well, we'll see what tomorrow has in store. Chewy, why did Chewy fall today? No, you didn't say fall. But yeah, Chewy's up today, I was going to say. So up 6 1/3% on the day there. All I really saw earlier, was this the one? All I really saw, this is kind of funny, that they're going to confirm, they did confirm that they are launching telehealth for pets. That was the only thing I caught this morning. I just happened to read it early this morning, and I thought, I didn't even think it would move the stock there, but telehealth for pets, man. Just turn the camera on your dog and see what happens there. I don't know. All right, I'll wrap it up there. I really appreciate you guys hanging out with us here today. We'll be back tomorrow to do this all over again, and Wine and Wealth tomorrow as well. Come hang out with me. We'll have some red drinks and teach you where to find everything if you're one of our customers here. Other than that, enjoy the rest of your day. Thank you so much for watching, and let's see what tomorrow has in store.